Hi everyone. We'll be kicking off this webinar within around 2-3 minutes, so stand by. One more thing, before we go live, can anybody confirm if they can see the first slide and the slide only on the screen and can hear me perfectly fine? Just you can write in the question section or chat. Okay, great. Thanks for confirming. Okay, and before we get to the very material of this webinar today, I would like you to go through the disclaimer and the risk warning briefly. Make sure you are familiar with it, and just take a minute or two. Okay, I hope you took your time to go through the disclaimer and the risk warning. So, my name is Otto. I'm part of Blue Sky Forex, which is also part of Blue Sky Binary. And I will introduce our group in a bit. First of all, I'd like to go through the agenda. We will talk very briefly about price action versus mean reversion markets. There are two types of markets there. We'll go through Fibonacci theory, and I will show you and give you a couple of points to keep in mind when you want to use Fibonacci to trade FX. And I'll also let you know how to manage your stop losses and take profits when using Fibonacci. And as per standard, at the very end, we will have a Q&A time where you can ask all your questions. If during the webinar you will have a question, simply mark those down and ask them at the very end. I'll be more than happy to answer to the best of my abilities. All right, as I mentioned, I'm part of Blue Sky Binary, Blue Sky Forex. We are a group of nearly 10 senior traders now, and we do provide 24-hour trade support and also market analysis to allow FX and binary option traders to trade safer and to help them become more profitable traders. We all have our own pros and cons, strengths and weaknesses. We have different techniques. Some of us are technical traders, some of us are fundamental traders. So we got everything on board. Now, regarding the types of markets, this is generally explained in the beginning of each webinar because it is relatively important to understand in what type of market you are trading in. And how to configure your trading habits according to the market type you're in and the market conditions. So first of all, we will have the price action market, the trending market. This tends to be more powerful as the price movements are more significant, as well as trending markets are usually fueled by news. And the more significant the news is, usually the more impact the news will have on the price movements. And then we will have the mean version market, a ranging market in different words. Both market types can be profitable. Does not matter what strategy or what approach you use towards trading. Whether you like to trade with the trend or you do like ranging markets, both of them can definitely be profitable. Mean reversion is relatively easier to define and notice, as the price tends to linger between certain support resistance levels. And especially Fibonacci retracement patterns. These can be used to determine those support and resistance levels. And today I decided also to open up a live chart and see how to draw a Fibonacci retracement on a live chart, and then how I personally use them and would use them, as it is relatively technical indicator, and I'm a technical trader. I do like Fibonacci retracements in overall. Regarding the Fibonacci theory, it's relatively simple if you understand it. The logic behind it is really simple. It was invented or discovered, so to say, by an Italian mathematician, Leonardo Bonacci, in the 13th century. And after that, he introduced it to Western mathematics. But the origins of the Fibonacci numbers, or the sequence, they are traced back to Indian mathematics. How the Fibonacci sequence looks like is, if you can see my cursor here, on the very left side of the sequence, you have 1, 1, 2, 3, 5. If you analyze this a bit more in detail, you can see that the current number you're looking at is the sum of the two previous numbers. Exactly, easy as that. 2 is the sum of 1 plus 1, 3 is the sum of 2 plus 1, and etc. What is the most mysterious part of this Fibonacci sequence is that you can find that sequence all around the nature. In physics, also in biology, in bee procreation patterns, flower patterns, etc. And no one, in fact, has been able to explain why this sequence appears in nature. And as humans are part of nature, the trading habits and the trading decisions they make partially are also based on this Fibonacci sequence and this Fibonacci theory in overall. So it's a really interesting topic. If you do have a bit of time and want to give it a read, then definitely do. And if you do dive into it, you will find the Fibonacci topic to be really, really interesting. On the picture on the right side, you see how the Fibonacci retracement tool is drawn on the chart. You will have different percentages here, which we will again get into shortly. First of all, before we go into analyze the Fibonacci retracements, you also need to know that there are different types of Fibonacci indicators out there: Fibonacci arcs, fans, and time zones, and some others, some other hybrid indicators, which are not really commonly used. The reason why we talk about Fibonacci retracements is that the retracement indicator is more widely used, and I understand why it is more widely used, because it's a lot easier to understand and technical use. Now, Fibonacci retracement tool itself should be used after you see a large movement, either up or down, doesn't really matter. And you will start drawing the Fibonacci retracement line from the top or bottom, right before the large drop or rise, right before the big move, to the very extent of the move. So you will see graphically very shortly as well. After the line is drawn, you will have different percentages, the retracement percentages. And the most important ones you will see is 22.6%, 38.2%, 50%, and 61.8% of the retracement, and also the full retracement of 100%. But you will really see this 100% of retracement quite rarely after a very significant drop. Usually these significant drops, they are fueled by news. So after the retracement happens to a certain Fibonacci level, the price relatively often continues in the same direction of the trend of the first big move. And this is the result of news that are fueling the drop or the rise. Now, something to keep in mind when you are going to use Fibonacci in FX, the Fibonacci retracement levels. As mentioned, you should seek for a rise or drop of more than 100 pips during the main trending day, which means that the rise or the drop should have happened during the main trading session, in example, the London session. During the London session, you will have usually a lot of news, and then these news fuel the move, so you will be able to take advantage of these large drops or gains, and have Fibonacci retracement levels assisting you. Most all chart providers give you access to at least the Fibonacci retracement tool. As I mentioned, this is more commonly used of the Fibonacci tools technically, and definitely it is integrated inside MT4 as well. You will have different versions of Fibonacci tools there, which I will also show, but we'll be focusing on the retracement one. As mentioned, you will draw the line from the start of the drop to the very end of the drop or rise, vice versa. you will see all graphically shortly, as I mentioned. But if you do see signs of exhaustion, that's the time when to draw the Fibonacci line. And then based on the lines that are drawn by the tool, you can determine to where the price can retrace. So if you had a large drop during the day, during the London session, you see already signs of exhaustion in the price in the candlesticks if you're using candlestick charts, then it's the time to draw the Fibonacci line, and you can actually see whether it has enough, so to say, bouncing power to retrace to the very first Fibonacci percentage, which is 23.6%. You will have some short opportunities when it reaches that level. If it is a significant bounce and does climb further, then the next level where it has a chance of bouncing down again is the 38.2%. And it's vice versa when you're looking for a short, or sorry, a call trade, a long, a buy trade. So here's the actual chart where a Fibonacci retracement line is already drawn. You can see usually the chart providers show from what point to where the starting and then the ending point is. And here you can see the Fibonacci retracement lines. This is the very first Fibonacci retracement line, 23.6%. As you can see, during the day there was a large drop fueled by news. You will see some exhaustion here. And then you already have an opportunity to apply the Fibonacci retracement, and you can see where the price can retrace. I personally don't like this chart very much. I will show you an example inside MetaTrader 4 with a live price. Perhaps you will have a better idea how to draw the line, how to use the tool, and where the price can retrace. This type of formation from the candlesticks is called a dead cat bounce. So you'll have a significant drop during the day, and it bounces off from a certain support point. And then this bounce usually is caused by either traders buying the asset at a very lower price and hoping it will go up again, or simply people exiting their short positions that they took advantage of during the drop, during the day. Okay, just give me a moment. I'll bring up a chart inside the MT4 and I will show you how I would draw a Fibonacci retracement line. Just one second. Okay, can you please confirm in the chat if you do see the MT4 instance with a Euro USD 1 hour chart open in front? Okay, awesome. Thank you very much for the confirmation. Now this is a live chart of Euro USD. It's a 1 hour chart. The 1 hour and 4 hour charts are the chart timeframes you should be using when analyzing for Fibonacci retracement opportunities. Essentially, you can use them on the lower time frames, but it's not really advised, as you will really have a narrower vision of the overall market condition. And this is fundamental knowledge. The lower time frame you use the less information of the overall market and the market conditions you will have, and the larger time frame you will lose the broader picture or the more general picture of the market you will have. 1 hour and 4 hour charts are kind of a great middle ground, and I personally only trade on 1 hour charts. Sometimes I zoom out to 4 hour or daily charts to get an overall picture, and in some cases I zoom in to 30-minute, 15-minute chart, and in rare cases to 5-minute chart to time or my precise trade entries. Okay, enough about chart timeframes. Now let's go ahead and use the Fibonacci retracement. Now MetaTrader 4 itself has the Fibonacci retracement line already here in the quick menu. This is the Fibonacci retracement. There are, as I mentioned, different types of Fibonacci indicators, and you can find them when you go to Insert at the top. You go down to Fibonacci. You will have the retracement at the top, time zones. You'll have a Fibonacci fan, which looks like this. I personally don't use it. I never use it myself. I can't really say if it is useful or not in your trading environment, but for me, I haven't really looked into this. I don't like it. And we have then Fibonacci arcs. Right now on this 1 hour chart, they're really relatively straight lines, so I don't really manifest really well on this chart at the moment. But now what we are here for is the Fibonacci retracement. Now, as you can see, there is a relatively large drop. This is more than 100 pips, 120 around that. This drop, however, lasted for a couple of days, so it's maybe not a perfect example, but it really well shows how the Fibonacci levels work. So let's say we have a perfect drop during the day, and you are looking for perhaps a short opportunity after the retracement has happened, maybe at the first Fibonacci line. Then what you will do, you will draw from the very high of the price to the very low of the price. So beginning of the drop to the end of the drop. So from start to finish. You can see that these very first Fibonacci lines even serve as a relatively strong support level here. You can see the price going down and bouncing off the very first support, very first Fibonacci level after the drop, and it continues to serve as a strong support level for the price. Same goes for the 38.2% retracement line. As you can see, the price does reach it and right bounces off. So if you drew the retracement line from the top to bottom, maybe after you see some exhaustion here happening, you'll see a near doji here, then you might as well have gone short here. Eventually, depending on your stop loss, if you are a bold trader, you have set your stop loss maybe around here somewhere. You might have won a couple of pips when it got down here, sure. If that very first level didn't work out for you, then the second level already serves as a great shorting position. You can see it's relatively decent move down after it reaches the first, after it reaches the second Fibonacci retracement line the first time. Right now, the market conditions, they are relatively, how to say, spooky and inconfident. So you will have quite a great volume during the day. So this picture already, this chart shows how well the Fibonacci retracement lines or levels work in your favor if you know how to use them. So look for a large drop, ideally during one trading session, and then you can draw the Fibonacci line after you see some exhaustion. And certainly you can use these lines to reap some pips. Regarding stop loss and take profit levels, now regarding Fibonacci, it highly depends on the move itself. How significant was the move? Was it the 200 pip move? Was it 250? Or was it simply a 100 pip move? Also depends on your risk appetite, the equity you have available on your account. I can't really give you any suggestions or any guidance regarding your stop loss. 1 second. Okay, you should be seeing the screen again. All right. The stop loss and take profit levels related to Fibonacci retracement does rely on your personal preference. Let's say if we take this example here on this chart, let's say we have the big drop, we see some exhaustion, we have the doji, we see the price moving up significantly already. It reaches the first Fibonacci line. Let's say I don't really like to trade at the first Fibonacci line. If we have such a significant drop, I'm expecting the price to retrace to the 38.2% retracement. I'll wait till the price does reach that level, then I go short. And the very easiest thing to do would be to set your stop loss at the next level, or maybe a bit further from here, to make sure. As you can see, every time it reaches the level, it does pierce it a bit. So setting the level at the exact same point is not really wise, because your stop losses maybe would have been hit here already, but maybe just a little bit further. Let's see how much we have here. We have 462, maybe around 10 pips below or above the level. So if you set your stop loss here, and you set your take profit here, to the take profit should be relatively close to the Fibonacci line. This is out of my personal experience. This is how I would like to use Fibonacci and how I use the support and resistance levels. For take profit, I set it directly at the support or resistance line. For stop loss, I set it a bit further, depending, of course, on the magnitude of the movements in real time. Sometimes 10 pip or maybe 15 or 20 pip distance from the actual level is totally fine. So I hope that this gives some idea how to use the Fibonacci retracement line to your advantage, how to draw it on the chart, and this gives you a visual idea how these retracement lines work as support and resistance for the future price movements. It's exactly the same way, vice versa. If you are looking for call opportunities after the retracement, then you simply draw the Fibonacci line from, let me show you, from the low of the drop to the high of the move, an example. As you can see, again, these lines that are formed here do serve as relatively decent support and resistance levels as price sees some confidence around those areas here. Okay, I think that would be it. Feel free to write down your questions. I'll be more than happy to answer them, and I'll do my best. Okay, Saran is asking, can we use it on weekly and monthly time frames? Definitely. Of course, you can use Fibonacci retracement lines on larger time frames, but please bear in mind that in this case, if you are already looking at those large time frames, then you are a position trader, and most likely you're aiming for maybe 500 pip movements or so. So you will need to consider that when placing your stop losses and take profits. Because if you're aiming for these large movements, these large pip gains, then you have to have an adequate stop loss as well. And so essentially you need to be willing to lose a couple of hundred pips with your trade. Okay, Hans is asking, do you trade only on the retracement? Hans, sure, but thanks for the question. I usually, not usually actually, it depends, everything depends on the market conditions and the market, but more often than not, I tend to trade with the trend. So I trade towards the price movement after the retracement has happened. You can go ahead and trade the retracement itself. If you see already some exhaustion, you will have candlestick analysis hinting for a reversal or a retracement, and the price hasn't yet reached the very first retracement level, then sure, after a large drop, you can also go for a long trade. That's totally fine, and maybe set your take profit to the very first retracement level. This is the way you can also trade it. Why not? I personally trade with the trend after the retracement. Melitius is asking, can you use on the ranging market? Yes, as explained in the beginning, you can use that on trending market after news has fueled a large drop or rise in the price. You can also use that on a ranging market. You can determine the high points and the low points of the range. In this case, I would look for certain significant support and resistance levels, the very first support and resistance levels near the price, and then use the Fibonacci retracement to determine the retracement levels. Why not? Okay, Kamran is asking a good question. How to know the lowest low or the highest high on the chart? Because on the real time, the chart continuously moves on. If we draw on the lowest low level, suddenly after some time, it will be a low again. I know exactly what you mean. It's really easy to draw anything on a price history or on the chart or the price that has already formed. How to determine a new low or a new high is you have to use some candlesticks analysis. If you see some exhaustion in the price, you have some shooting stars, hammers, you see some dojis, consecutive bullish candles after a large bearish market, bearish drop, then it's the right time to draw these lines. Of course, like with everything, when you're trading, there are very few things that always work, right? So this is not really, so to say, a holy grail system or a holy grail theory that you can solely rely on and trade successfully. No, you still have to implement candlestick analysis, a good fundamental understanding of the market and the news is also beneficial here. So it does take practice to see and have an idea where the new highest high or lowest low can be. Leo is asking, can Fibonacci be used for scalping? Yes, definitely it can be used for scalping. For example, during the ranging market, where you don't have a magnitude of 100 pips up and down all the time, you will have relatively lower magnitude movements. Let's say the range of the market is around 50 pips. Certainly, if you draw the Fibonacci line and use these retracement lines as potential entry and exit levels, you can certainly reap intraday 20 pips here, maybe 30 pips there. It's definitely possible and can be done. Okay, Hans is asking, how often will the retrace make profit? Let's say how many times out of 10? You are asking what is the, so to say, accuracy of this tool. Well, this depends completely how you use it and what you incorporate with your Fibonacci retracement tool. What you can use along with the Fibonacci retracement, you can use oscillators, RSI, stochastics. You can use MACD, an example. Any divergence in the price and any technical indicator, just to time and pinpoint your entry and exit. So the actual accuracy of this method depends on how you use it and how and what you incorporate with your trading decisions there. I know it's really not precisely answering your question, but yeah, it's completely up for the trader. And one can be 100% accurate with it because one knows how to use it properly, one has experience, and one knows when to use it and during what market conditions. Another one can use or draw the Fibonacci retracement line everywhere and initiate a trade every time one sees a potential opportunity perhaps, and one can be at 50% accuracy, an example. Ismail is asking, is it wise to use Fibonacci extension, and if so, what time frame for an intraday beginner? I would say that a 1 hour chart is always a good middle ground to trade with, especially if you are a scalper, if you're an intraday trader. Definitely use perhaps 15 or 30-minute chart to determine your entries, and use larger time frame charts to confirm or define the market conditions and get a broader picture of the market conditions in overall. Any more questions incoming? Okay, it seems there are no additional questions incoming, so I hope that today's webinar gave you a bit of information how to use the Fibonacci retracement tool, how the retracement lines actually serve as support and resistance levels for future price movements, and how effective it can be as well. I thank you very much for attending today, and see you next time. Take care.